Okay. Good day, everybody. This is Jim, the option professor here, and I will be sharing my opinions and my views with you on the different stocks that you may have that you want to have analyzed. And I'll also go over some things that I'm have been looking at and I am looking at right now. And at the end of the broadcast, I'll explain how my options alert service works, so you guys can take advantage of that as well. If you have any stocks you'd like me to take a look at, all you need to do is put it in the chat box and I will be able to help you with that. Until I see some requests, I'm going to go through some of the markets. We are getting a very nice bang to the upside. Again, the PPI again was better by 0.1%. So apparently that's enough to make the markets go nuts. I'm viewing this as a reversion rally, which is what it is right now. And as you can see from my chart, we did bust under my longer term average, and now we got back above it. And so the market is, making a run for this area up here. First, it made a run for the first red line, which was 53.56. And of course, it had some trouble there, stalled out. But today's action has busted through it. And now we're going up towards the neighborhood that's above, which is between 54.50 and 5,500. Let's call it like that. Okay, so that's the next neighborhood where we could have some issues. And obviously there's an air pocket there between the averages. So obviously there's nothing stopping it. And that's why it's going up so nicely. The RSI down here is coming right up to the 50 line again. So it'll be interesting to see if we can get through 50 substantially. That would be a positive. And then of course, if we can get through this neighborhood of 54.50 and 5,500. So that's the neighborhood you're looking at. And again, we've got CPI coming out, I believe, tomorrow or Thursday. And then you've got the, what do you call it? You've got the retail sales. Okay. Home Depot was nothing to write home about, I believe, is what I saw earlier on Bloomberg, but I couldn't verify that. Let's just see real quick what the Home Depot is doing, because I know they did come out with earnings earlier, but I thought they weren't the best. But maybe it's buy the rumor, sell the rumor, buy the fact. Let's find out. Home Depot. And then we got Walmart coming up. And I'll show you Walmart's chart. These are just, okay, must have been a little bit of well, of course, you came down to the gold line, and that's major support. As you can see, major support. So Home Depot came down to the 339 neighborhood and could have bought it there with a stop underneath the gold line, which came in at 338. So pretty low risk at that point. And now it's made a run back into the neighborhood where there's resistance. So again, if we're not going into a recession, and with the employment numbers, and if retail sales is good, and we saw the ISM services go back into the positive level, everyone's leaning the wrong way. And when everyone's leaning the wrong way, obviously you get it to go the other way pretty good. So if we do get above if we can hold above 351, which is not there now, but if it can get through 351 and then above 354 and 357, I would say it's back on the bicycle. It looks like it's trying to do that, but it wouldn't, obviously with the red line pointing down, it's still got some, shall we say, wood to chop. But it does look like it's trying to make a turn. But I wouldn't be very confident in this until I saw it break above some of these other averages. And then just very briefly on the 5-year graph, you can see that this neighborhood here, this is when I do the strangles on it, or I look to do strangles, because again, when it's in this kind of a neighborhood where you got all these moving averages, with each other, it's not going to stay in that traffic jam forever. So once either the bulls say you go ahead or the bears so you go ahead, it's either going to probably come down to the 320 mark, or it'll blow out these highs and get going above 380. So you've got, and a lot of the averages are pointing a little bit to the upside, and the RSI is holding 50. So, but again, this is a deal where it's going to be binary, in my view. It's going to be binary. It's either going to be taken off or it's going to be going back in the tank. And we'll probably know sooner rather than later. Right now, again, it is not above the 351, 354, 353 area. That's the neighborhood of resistance. So if it can't get through there, don't be shocked if it goes down to 320. Okay. But if it does, you can see that there's a lot of congestion, and if it resolves itself to the upside, I wouldn't be surprised it takes out the 380 and gets going. So keep an eye on it. Right now, the jury's still out because it's not above resistance. One other one real quick, and then I'll get into your stuff. Walmart, that's coming out Thursday. I think that one's going to be interesting because it's kind of in a tight window here. Where are you here on Walmart? Yeah. See, I'm thinking it might go in the tanker a little bit here. Let me show you why. Well, first of all, I'm a believer in reversion to the mean, and that thing is way up here, and it already reverted to the least amount of mean, which is $68, and it broke it. So that was the first mean. The next mean's down here at 64 and then 61 and change. Now, if you go to the 1 year graph, this is another one where a combination might not be a bad deal. In fact, in my alert, I talked about a 70 call and a 68 put. And I think this thing could easily go down to 64 if it got bad news, or, say their margins are not that great, or maybe everybody's buying their groceries there, which has a very tight margin, right? But they're not buying the other stuff that much. And I go into some of them now, and it seems like you're going into Fort Knox. I mean, they got the underwear locked up, they got the toothpaste locked up, they got you want to get a vitamin, you got to find a guy. It takes 15 minutes for him to come over. So I don't know, is that bothering people? It was bothering me. But at any rate, we'll see Thursday. Obviously, it's a cheap place. That's why people go there. I mean, you get very low prices there, but now they're making it a little bit tedious. And if the low prices is not that dramatic from then going to the regular store, like if it's a buck difference or something, and you have to go through this, get the locksmith over every time you want to get a toothpaste, maybe they'll lose business. I don't know. I found it to be not that attractive. I'm sure they have a lot of problem with theft, so that's why they're doing it. I'm just talking from the consumer point of view. It's a little bit less pleasant. Okay, so anyway, yeah, that's what I'm seeing here. So, I was thinking 70 call and 68 put might be the way to go. If it busts out here to 72 and change, you'll be golden. And then, of course, if it goes into the tanker here, that'd be good too. Okay, so let's talk about some of your stocks. And I see them here, MPC. And that's an energy stock, Marathon. And a lot of people like it because it had some pretty good earnings when it came out. Let's see what it's doing now. Come on, MPC. I got a MPC. Hang on. There it is. Okay. So I got it up here now. Let's start with the long term and see what it looks like on a 20-year basis. I like to look at the big picture and the small picture. As you can see on a big picture, the darn thing's gone from where? $220. $20? Woo! $20 during the crash of COVID and right afterwards, and it's gone up to 200. A nice ride, huh? But you remember when I tell you about reversion to the mean? Anybody who's buying things that are way away from their moving averages, in my view, they need their head examined because the probabilities stink at that point. You want to get into this thing when it pulls back to the red line. When it pulls back to the red line, you do your little buying, right? Right now, it's pulled back to the red line, so maybe it's a decent time to take a shot. Everything's still rising, but it still could have reversion to the mean. So if oil does crack, this thing is down 121 today. If oil is not going to get through 80 and 85, and it's going to go back into the soup, meaning down towards 70, then this thing would have vulnerability to maybe come back down again. So again, if it's not, and we take out 80 and we take out 85, I'm a believer of $100 crude if we get above $85. So we went up to this 80 number, and we'll see if it can get through it. Again, last time we were up here, I was telling people, this thing is going to be at a high point here because the Goldman Sachs commodity index is having a heck of a time getting through 600. Let me show you that. Because again, this is a commodity based situation. And the Goldman Sachs commodity index, half of it is energy about. The other half is split between agriculture and metals. So basically, if we look at the long-term graph on this thing, you can see it had tried to get through the green line, failed, tried to get through the green line, failed, and now it's back down here. Now it's had a rebound, but it's off a little bit here. But you can notice if it gets through 600, I think it could fly, which means oil would probably fly. And there is a gap. You see the gap on this thing up here? It's between about 690, 700. If we ever could get above 600, and that might be a rough racket because the purple line is a tough one to crack. And it's holding on for dear life down here. And down here is around what price? Let's see. Right down here, the price is 228. Excuse me, 528. And it hit 535. So it came down, held on for dear life. Now it's bouncing. Still got a lot of resistance, which would tell me oil and metals may have resistance, and grain. I mean, the soybeans are tanking every day. So the bottom line is for the energy to really get back on the bicycle, I'll give you a little look at the crude. Yeah, see, crude's having trouble again at that 80 number. You see all these numbers here, 80, the high was 80. See, the high was 80, 86, and look where the 24 was 80.06. So, you know what I mean? It ran into some difficulty there. And so we'll have to see if it can hold. Yeah, this thing ran through here and now it's back underneath the 78.75 area, 78.50 area, 78.75. So keep an eye on it. Like I say, if we're not going into a big recession and the oil's is still tight, then these guys can still make money. With regards to just give you a last idea on crude, you see the September month is at 78. I'm going to show you March of next year, and then I'll explain what that means. Okay, so we're at 78 on the front month, and March of next year is trading at next year. Hang on, please. This is important if you want to know something about the pricing situation. The supplies, I guess, are pretty low. They're supposed to increase supplies, but the base is pretty low. So we're at 78 in the front month, and we're at 73 in the back month. That is a dynamic called backwardation. What does it mean? It means supplies are tight. So they may be adding barrels, but if they're adding barrels to a very, very low base, it may not have that much of an effect on it because, again, if the supplies, when they start adding, is very low, and again, I just showed you what backwardation means. Front month is tight, which means immediate delivery is going for higher than deferred delivery, which means the supplies are tight. So that's a good thing if you want to be bullish. Again, the demand is going to be a factor. So if we're not going into a recession and it's just been a reversion the last couple of weeks and we're right back in the game again, that should be good for oil. And if China, who's trying to stimulate here, there, and everywhere, can get going, obviously that would be a big benefit for energy too. It's been a big drag on energy and stocks that are dealing in China. So let's get back to your idea on Marathon. I think I was pretty clear on it, that A, on a long-term basis, it's still pretty overdone. And then on a intermediate term basis, it's holding on to some good area. You see, it's all traffic jam again here. Traffic jams between what, 174, 175, and about 172. And so we're at 174, 175. You know, it's not going to stay here forever. It's either going to take off above the 180 and get going, or it has a shot of going into the tanker here and going down and testing purple. But I don't think it's going to stay here, you know, for 6 months or something like that. You're going to get a significant move out of there. Same thing here. It came down, busted under gold, then got right back above it. That's bullish. But you can see purple is very much there. So this thing is coiling between 170, 180. You know what? Above 180, here you go. And under 170, then you're going to have some problems maybe, and it might go and surprise people on how far it could pull back. So again, I'd watch this thing and I'd be more interested in it above 180 or on puts, more interested or getting out underneath the 170s. And again, these averages are converging in 170 and the purple is a big, big number. And so basically those are very key numbers as far as I can see. Okay, so that gives you a little bit of idea on MPC. Okay, now we're into TSM. And that's one that I really like because one of my ideas on the options alert a few weeks back was Taiwan Semi before their earnings. Let me show you how I figured that one out. Right now, you see RSI here is at 71 on July 8th, and the price was 192 and change. We go up and make a new high here at 193 and change, but the RSI is down to 62. That tells me, in my analysis, in my opinion, that market's running out of gas. So if you're running out of gas on an all-time high, I'm interested in the put side, particularly since I'm a believer in reversion to the mean. And that means we're going down to 170 or 150. Now, call option up at 215 and a put option at 180 for about 500 bucks. That was the alert idea. And then, of course, the reason you do the call is because you see it's still in an uptrend. I don't know that it's not going to blow off to the upside on earnings, but I have an instinct that it might not. And so, and of course, I thought the whole market would revert to the mean. So obviously, I'm negative on the market at 5,700 or 5,600. And then, so this thing basically comes down and it blows through the first mean there, and it goes all the way down here towards there. So, that made the put option go from about $3.50 to $3,000. And so that's a pretty good jump. And people who bought a little bit more time could have picked up another couple of grand on this thing. Now it's back on the bicycle. Got back above 150 is good. Got back above 160 is good, but it's running into the neighborhood of the blue line, and the blue line comes in at 170, and it is above it. So right now it's peaking above it. It may be going after that gap. It may be going after that gap. But again, it also, if it can't get through this neighborhood, and like say we tonight we were closing underneath 170, or by Friday, because of CPI, it breaks under 170, then I'd be prepared for a further drop. Okay, obviously this neighborhood, and again, this red line's turning up a little bit, so you might get it to back off, but just as easily it could come back down and test 160. Let's say you look on the 1 month graph. But again, this gap isn't a tractor, so that's 185. So you got a 15-point jump there possibly, and it is above purple on the monthly, which is good. Comes in at 166.50. Excuse me, 169. So you see where these numbers are being coincidental. If you can't hold 170, you break under 170, you break under 169. Then of course you're back under purple. And then, of course, if you break underneath the red, which is 167, it'll open the door for the move back down towards 160. Okay, but it does look like it wants to go. The RSI is at a nice level of what? 66. So, this is the level when it gets into the deeper 60s where you can see RSI go to 70 or 80. And of course, if it goes up and takes out, if it goes up for that gap at 185, you're going to see the RSI on this 1 month graph go into the 70s and 80s. Okay. So again, very kind of an exciting time because it's on the verge. On the verge of what? Either going to fill that gap or failing and come back down to 160. That's my idea on TSM. The better deal on TSM for me was obviously when it was on the all-time high right before earnings. So I'm not quite as interested in it as here, but I can see how people would be interested in it because it looks like it took all the pain down there at 130 and now it's back up here. And then everyone is now, don't forget, the closer you get to the end of the month, the closer you get to NVIDIA's earnings, the closer you get to Broadcom's earnings. And if they come in robust and everything's still on board, then obviously the guys who make the chips, make sense that they'd go after the 185. Okay. If for whatever reason their margins are coming down like they did with Supermicro, right? Supermicro got hit because of their margins went from, they were looking for 11 or 12, came in at like 7. That's a big miss. And if margins go out the window, people aren't very happy about that because profit margins are a big part of how they qualify these stocks. Okay, let's see what else is going on with YYAI. Don't know that one. Sounds like a fun stock though. YYAI. Okay, it's a sports technology company, and let's see what the sports can. It's $12. How long has it been around? Probably not 20 years. Maybe close to 5. Okay, well, I don't know what this one's all about, but I'm glad I didn't buy it at 5,500 because it's only going for 12 now. All right, so this isn't my game, but I'll try to play your game. On my 1 year, I really can't say much about it. It does look like the RSI is still in a weakening mode, so it'd be hard to get rapidly bullish on it without more information. I'm just looking at the technicals because I don't know what YYAI does, but I can tell you the technicals as I see it. The 1 month, well, it doesn't look that great, right? So the bottom line is if you're looking for, now there is a gap up there at 1550, but look at all the resistance above to get there. That's like, 4 or 5 linebackers staring in the face, and you're trying to figure out how you're going to get in the end zone. Could be a rough racket, right? So, and then let's look at RSI here. Low here was 42. Where's the low here? 35. There's no divergence. I don't know what if you're bullish, you must know something I don't. So that's all I can tell you about that. if this thing, let's say on a 5-day basis, anything going on? There's not much going on here on the bull side. Any divergence of 37 here? And no, I mean, I don't know. Stay out or leave it alone until it starts technically looking better. That would be my suggestion. Okay, FCNC, FCNCA. That's the beautiful thing about this. I find all these stocks I'm not following. Okay, First Citizens Bank. I'd imagine it's a regional bank. Whoa, that's the price of it? $1,900? These guys are overdue for a split, huh? Okay, so anyway, let's go back. Maybe they've been around a long time. Yeah, they've been. Well, again, this is great. I mean, obviously, this is a fantastic stock as far as the pricing are concerned. Now, again, what do I tell people? You're buying stuff at 2,200 and the moving average is 600. You need to have some hot coffee, I think. So it could keep going, but I'm just trying to say the liability of getting in there at 2,200 is beyond my means, because again, it could go down to 1,600, still be a good stock, but I'd be down like what, $600. That's a lot. So, you want to get into the thing, you get in there when it pulls back to the blue, when it pulls back to the red and blue, then you get in, or you want to ride the red liner here, all the way up. But up here, maybe even hedging if they have options. Do they even have options? Let's check it out. Yeah, they got options. So if somebody wanted to, yeah. Hang on. I got to go here to go back, and then I'll go back to full screen. Anyway, this is a stock that's obviously, if you've owned it, God bless you. You made a lot of money, and now you got to figure out if it's going to pull back to the mean. Obviously, it dropped $400 for a reason. The reason is, one reason right off the bat was that it was a, what do you call it? Way overbought. Okay. Then you go to the 5-year. What does it tell you? Again, pull back to the mean, and it did. So if you wanted to buy this thing, you had a shot down at around 1,800, right? That you could have reasonably said, these are the former highs, so it should hold there, 1,800. And the red line comes in at 1,804, and the low was 1,834. So in this kind of stock, risking $30 is nothing. So bottom line is that was your chance to get in. And on the 1-year, again, the red line is trying to turn down. That's why it's having trouble here at 1995. Gets through 1995, it's back on a horse. And look at that RSI. It looks like it's trying to get going again. What I'd be concerned now, to be honest, would be, is you see those highs in RSI at 88? If this baby took another run up and blew out the high, but the RSI lagged, that would be the time for me to really do some dumping. Because then I would say new highs and a divergence on this kind of thing with this kind of overbought condition, I'd be very concerned. This thing has a up flag down pole look to it as well. So be very careful around this 1995. You had a shot to buy it at 1850, 1834, and now you've had a shot up here to 1995 where maybe it's a sell. Because again, I don't like the red line pointing down. It's not really pointing down that much, but it is pointing down. And like I say, it does have a up flag, maybe down pole look to it. And so it wouldn't be shocking to go retest 1850 again either. But if it does break out to the upside and you get a lagging RSI on a new high or something, that would be another warning signal on that stock. Okay, I got that one done. And now they got the Silicon Valley. Oh, okay, so that's what they did. They bought the fire sale of Silicon Valley Bank, which everybody did because the government paid them to do it. And I think so. Anyway, there's a reason behind it. Yeah. At any rate, yeah, that's the story on that stock. Let's look at some of the Magnificent Seven, because you did have a couple of opportunities here, I think, maybe to get into some of these if we're going to go and have a sustained rebound. Google. Again, I think Google is at a very critical juncture here. Look at that thing right there. I mean, you're trying to tell me this thing isn't going to make a major move one way or the other? I mean, you got two things coinciding right there. So this thing has potential to go up towards 175, 180, fill that gap. See that gap there? So it's got a possibility of doing that. And then, of course, if it can't get through this neighborhood, this is a little up flag down pole. You could go down towards this number down here. So again, it looks like with the RSI trying to recover, it would like to break out to the upside. But since the market's up 79 S&P points and we're having a hard time getting above 166, I'd be a little concerned. But again, concern could, maybe the CPI Thursday, maybe the retail sales will get a little bit of glow of optimism. And then, people do love this stock. It's one of the main stocks in the world, right? So keep an eye on it. And Microsoft was another one. I saw three of them were kind of playing reversion to the mean. Google, Microsoft, and two of them were pretty good. So here you go. This one's another one. Yeah, it's the same story. It held gold. You want to take a shot at Microsoft, there's your chance right there on the gold. That's when you want to buy against these numbers, right? Against the purple, against the purple. Okay, not when it's up here at 470 and you have no idea what you're doing. Now it's trying to get above here, but it's got resistance here, but it could have a reversion rally. It could. Okay. Could's not a big thing for me though, so it's not that attractive. Anyway, there you go on Microsoft, another reversion possibility. The third of the magnificence was Amazon, and this one everyone seems to be keen on. Some people are talking about they might spin off the cloud business because it's a lot of value there. But this one is, again, doing the same thing. I took some shots at calls when it was down here at the 170 mark, and they're coming alive quite a bit right now. But anyway, trends are still down. Got a gap to fill up to 180. Could do it. Maybe CPI and retail sales will get it going. And then basically, like I say, if it gives up the ship, and it gets back under gold, that wouldn't be good. Again, people are thinking back to school. People are very cost conscious. They're going to want to load up with their kids' stuff, and rather than going and going to places and paying more money, Amazon might be the discount place. They can just buy stuff, get it sent to the house. Don't worry about lines. Don't worry about locked up cartridges over in Walmart, and just get the stuff without all the hullabaloo. That's why this thing could have a nice rebound into the 180 to fill that gap, or even 185 to go up to the blue line. It's trying to do that right now. On a 1 month basis, again, it's trying to break out here. Your RSI is still only 55. If we can go on a 1 month and fill the gap here, I'm sure the RSI will jump up towards 70, and that would be a very bullish situation. So it's trying. Clearly getting back under 160, well, I'll tell you right now, you really don't want it underneath 167.85. And if it gets under 165, then back in the soup it might be going. But this is a very big attractor here. Okay, any other stocks that you guys want to put up here? I'm trying to see in the chat box here. None yet. Okay. Okay, so that was the third of the ones. Now the two ones that look like they've already turned and actually would be better places to actually go after the Magnificent Seven was Meta and also Apple. So let's see. Yeah, Meta. Meta's been looking good for a while. It gave you a nice uptrend starting at 460, gave you some more chances at 485, and now we're up at 530. So this baby turned, back in the end of last month. And so basically on the 1 year graph as well, you can see, it gave you the turn here at 480, and then it got above purple, got above blue. So, this is the one you should have been picking up if you're going for MAGA. And then basically the other one was Apple. That looked good. So those two guys, they're not, just trying to get above seawater, sea level. Their heads are above water. And let's see what Apple's doing today. I didn't even know. Let's see if I put my foot in my mouth here. Let's see. No, yeah. See, these guys made their turn already a little bit here. And then you had a great chance. See, again, this is another one that I thought a reversion to the mean. You're in this congested area here. Well, here's two great ideas that came out of Apple that I tried to bring to people's attention. Okay, you see when in the beginning of June, we're down here and we're at 185, 190. They're going to have a convention in the middle of June called the Worldwide Developing Conference. That's going to stimulate the market. Now, it's already in an uptrend, so the most likely thing is going to bust to the upside. But if it was a terrible thing, it could have busted to the downside. So a $200 call and a 190 put strangle maybe cost 325 bucks at that time, would have paid off handsomely on this big spike up to 220. Again, when you buy long strangles, your risk is limited to the premiums only, and you're playing both sides. So obviously breaking up sharply or down sharply is the way that thing benefits. Dead in the water, you lose on both sides. That's the risk. Okay. So again, that would be one time that I thought it was a good opportunity. And the second time was up here where we were looking at 227 calls and 210 puts. And obviously the move down to 195 was a great idea for the put. And then of course, now it's right back into the junk here. So it does look like it's trying to go. But again, if it can't stay above the green line, and where's that at? 220, 221. So you're right there. This thing starts fading from here. It could go right back into the soup. But it looks like it's trying to break out and go maybe for that gap. You see, there's some gaps on some of these charts that they may go out and fill. Amazon had one. This one's got one. Okay. And on a short-term basis here, again, it's running into, this is a good, see, this is why I like to look at all different time frames, because I wouldn't know that there's resistance here at 221 unless I looked at this chart, right? So there's some resistance here. There's a reason why it would stop. So that's why this combined with that 220 number means if it starts taking out 220 on the downside, fills this gap, goes under 218, 217, this thing going back in the soup, the odds would be increasing that that occurs. Otherwise, like I say, there's a gap up here. You see where my marker is at 235. That could be exactly where it's going. A good CPI number Thursday, a good retail sales number, that could change the tune here. So again, a lot of these things are having rebound rallies and there are critical points. Google, I think, was, and this guy is as well. So it's going to be exciting going into the end of the week. And then, of course, what the Fed's going to do on September 18th is a big thing. But one guy made a good point. They should not be cutting. Why should they not be cutting? Unemployment has still got great claims, and it's only at 4% and change. I mean, for God's sakes, 96% of the people are working. Their wages are rising, not as fast as they were, but they're rising, right? And so, and then as far as inflation is concerned, I mean, we're still getting one tick, one tick, one tick, and you go around town, nothing's going down in price. If anything, if they dropped interest rates, everything would go back up in price because it'd be cheaper to finance them. So, he backs himself in a corner with this "we're going to cut" thing. The other thing, be careful what you wish for. Once they start a easing cycle, it's not good for stocks, because if they start an easing cycle, that means the economy is going to be weakening and unemployment might be rising. And sometimes after they start, it takes as many as 475 days on average since 2000 for the market to find a low point. So everyone is saying, please cut, please cut. And like most things in life, the direct opposite might be the outcome, So keep that in mind, because a lot of people don't think. And then as far as valuations on stocks are concerned, the CAPE ratio is at around 34. That's an inflation smoothed out PE ratio, right? Where they smooth out it for a 10-year period and also for inflation adjusted. So that normally is at average is at 17. And when it retraces from the 30, above 30 has been ultimately not a great time for stocks when it's above 30. It means the valuations are very high. And so bottom line is if it retraces down towards 22, the stock market also can take a good bite. I'll give you, I want to get to some more of your picks here because we still got time, but let me show you that SPX, because that's the cash index, okay? This is the cash index for stock, S&P. And where S&P goes, the NASDAQ goes, and the Russell follows, right? Okay, so on a 20-year basis, again, the risk here is when you got way up here in 2021, you're reverted to the mean, right? When you get way up here in 2024, are you going to revert to the mean? Well, the minimum mean is like where the 200-day is, around $5,000. But you could go deeper if there's any slowdown in the economy that everyone keeps thinking might happen. It's not happening that much, but it could happen. And so the bottom line is that gives you a little idea of your risk when you're holding on to stocks in this environment, if there was a reversion. Gives you a little bit of an idea. If you wanted to look at QQQ and the semiconductors, because again, if things do unwind, I'm sure everyone will be thrown into the kitty there. Here you're looking at, 360 on a more full pullback. Looking at SMH, which is your semiconductors. Just give you an idea of the risk if things were to revert to the mean. It already reverted to the red, right? It hasn't reverted all the way, but this thing has got a pretty big reversion potential if it does have a reversion. Even on the 5-year graph, I'm sure, yeah, if you go down to purple here, you're talking about down here. So again, these lines haven't crossed to the downside. If you notice when they cross to the downside, that's when your risk is going to probably be realized. So right now, it's still in a situation where it's just a reversion, and now it's getting back on the bicycle. But if it meanders between this height, this is on the semi, and the same idea for the Qs. If you meander between the 249, let's call it 250 area and the 220 area, and these things all converge like they did here, then your risk to the downside will be greater. That's going to take time. So anyway, just be careful and keep an eye on things. That's all. All right, let's get to your stuff here again. So that's my job here today, is to go over your things. Nail. Is that a stock? Home builders. Oh, 3 times bullish. I can never figure out these things. That's why I never trade them. In other words, the prices always look, well, this is more normal. Here's what you got on the home builders, okay? If you go, how long has this thing been around? Probably not that long. It's been around since 2016. Okay, so anyway, what do you got here is you've got a high point here at 69, right? Watch this. 69, then the next one over 56. Guess what happens? Bam, back to the mean. Now you got a high point here of 63. Well, the fact that 63 is lower than 69, I don't like. And of course, now it just did another reversion to the mean. So, I mean, you could use the red line as a base area. That comes in at 103, though. So at 110, you had a decent chance, right? Only a $7 differential. Now it's a $13, $20 differential, and that's kind of a lot. Looking at the 5-year. Yeah, see, remember I told you about traffic jams, right? So this thing could go taking off again because these things are pointing up. So again, here your risk is down towards the 112 area, 115. Okay, so a little bit better deal there as far as the differential between price and where this thing should stop, if it's going to stop. It does look like it might do that. So again, I don't even know if this is a Fibonacci retracement. Let's take a look. 180 to about 160. What? Let's see if that's the way it works. 163. So we go 163 minus 80. And you get 83 bucks, and you go 61, and you got 50 bucks. And so if you take 160 minus 50, you get 110. And where did it stop at 110? Hey, it's a Fibonacci number. All right, so there's a lot of good reasons to think this neighborhood around 110 might be a very good support zone. That was a Fibonacci pullback from here to here. And you got the moving averages looking pretty good. And the RSI held 15th, trying to turn up. So I would be bullish on this thing until it broke 110. And then I would be very unbullish because then it has a potential of going way down here. Okay, so there you go on nail. Cisco Kid was a friend of mine. Wasn't very friendly to anybody else lately. This thing used to be the biggest stock in the world during the dot-com boom. Biggest. And I think it's lost 70% of its value since then. So watch your NVIDIA. Things change, right? Okay, so we're going to put up Cisco. I thought they were in the fade mode. Let's see what they're doing. They have competition too. Where are you here? Okay, so you got obviously a downtrend. Let's go back 20 years. It's been around that long. And so bottom line is that, it has held purple pretty good. So if it can come down and make sure it doesn't get under 42 bucks, that would be a very good sign. What's not a good sign is all these things that are rolled over and pointing to the downside. So this thing has some support at 42 and it's got a resistance at 50. You're not going to make a lot of money on it unless it gets above 50. So obviously I'm not that interested in it, although it is developing a little bit of a down flag. If they got some kind of news or some merger acquisition or something, it could change. But right now, it's still on the down line. And this thing doesn't have anything underneath it, so that's always nerve-wracking. Let's see if you've got a divergence. You got a 34 there, and you got a what? 37. A little bit of a divergence, not a lot, a little bit. And so basically that's what it looks like there. Again, that's an awful lot of resistance above though. I mean, then, remember I told you about the 7 linebackers waiting for you and you're trying to get to the goal line. That's what it kind of looks like. All right. And then on the 1 year, lows here at RSI of 42. Now you're at 41. 40 is a good number to hold. So again, there's some reason to think that it could hold these areas down here. And you could have a reversion rally. I just know how far it can go because you got 19 things ahead of you. So I don't know what the upside is. Maybe it could have a bounce up towards 47 and a half, $2, maybe it could have a big rally up to 50, which would be $5. Not the most exciting thing in the world. There's a gap over here that needs to be filled, and that's up here at 56, but Lord knows what it would take to bring that up there. On a 1 month basis, again, you have lows here at 32, and you got a low here at 42. That's good. That's good. So what does that mean? That means it could pop and go to the 46, 47 area if it wanted to have a nice little rebound rally. I'm sure the calls are pretty cheap down here. So, you could price those out and see if they're going to do anything for you. But yeah, Cisco, not one of the most exciting places to be in the last long time, huh? PepsiCo and Coca-Cola. Somebody's thirsty today. Somebody wants some soft drinks. Here we go. Okay, PepsiCo. Here you go. Coke and Pepsi. They still have that fight going on? All right, you go back 20-year graph, and you can see this thing's been a good place to be. Apparently, people like their sodas. So if you bought it back in 2009 and left it alone, you've had a nice ride, pretty clear all the way up. Again, when the blue line is rising and it gets violated, that's not of a concern because you need to have these lines pointing down if it's going to be a sustained drop. In my view, these are all my opinions. I'm sure there's 9 million opinions. I'm obviously sharing mine. And as you can see, every time it penetrated, it was a great time to buy. This was obviously the COVID deal. So again, it's been good. Now it's getting a little more dicey, right? Because it's all congested. Remember when it's congested? That's a traffic jam. Do traffic jams last forever? No. Somebody lets you go through. It's either the bulls or the bears. So if this thing starts trading 180 or better, obviously it's got a good setup to get back on the bicycle because the blue line is still rising. But if you and the red's going down, that's not good. So this thing starts breaking under what? Starts breaking under around 170, 170. That would be telling you possibly that this thing is going to have a drop. And if it had a big drop, it could go all the way down to 135 under certain circumstances. Okay. Very much congested though. And at some point, they're going to make a decision on it. It's not going to stay there forever. So, be careful if you're bearish, if it starts getting above 180, and be careful if you're bullish, if it starts breaking under 170, and certainly under 160. Okay, what about Coca-Cola? Buffett's never going to sell it. That's what he says, right? Okay. Okay, well, Coke looks better than Pepsi. Coke beats Pepsi on this one. The 20-year, now let's look at the RSIs though. You're at 64 here, 65, and up here you're where? 66, no divergence, that's a good thing. Okay, and so anyway, it came down. Remember I told you about the traffic jam? And maybe Pepsi will break to the upside because they had the same traffic jam here, right? And who won? The bulls. And obviously this is where it broke out, and you could have made $8 by playing for the breakout as soon as it got above 60. Case in point, what I just made. Shorter term charts, what do they look like? Extended. Again, I'm not going to start buying something at 70. You should have bought at 62. Find another stock. But, obviously it looks pretty good. And again, looking at here, your RSI is at 64. And then at these high points, it's lower. So that's why it was weak. And up here now, you're at 75. 75 means, again, once you see, you got your deal going. Remember I said it's 60, right? So 60, you're at 58. Then you break into the 60s, right? You break into the 60s. And when you're in the 60s, you can go up to 70 or 80. And that's what happens. So this one was a pretty easy bet if you're following it between 60 and 62 that you're going to get a pop. If you're an option player, obviously the calls would have really jumped a lot for you and you had a great reason to buy them. Okay, SHW, I'm sorry. Sherwin-Williams. Anybody want to paint the house? Come on down. Here we go. Okay, this one's cost some money. Let's see. That is interesting here. We're going to look at this one's been around forever, so we're going to have plenty of data. High point here was what? 75. High point here was 66. Not good. High point over here, 62. Not good. What's my call? My call is it's going to revert to the mean. When am I going to have evidence it's going to revert to the mean? Let me show you. Here, what do you got? You still got a divergence 74 against 66. Again, revert to the mean. Okay. But there's nothing pointing down yet. That's the danger of playing the RSI divergence game. That's the first signal that the thing's out of steam. The more of a confirmation that's run out of steam is if you can find some graph that's pointing down. This one is starting to get that way if it can stay above what? Underneath, I'm sorry. If it can stay underneath 346. So I would use that as a pretty significant number, 346. Then I would look at the 1 month to see if anything there is going on. Here they tried to bring it down, right? They tried to bring it down, but it's back on the bicycle. But again, under 346, 344. Again, now I'd probably wait for 344, 342, because there's plenty of real estate underneath. You know, now could it keep going? Of course, it's a strong stop. It's a strong stop. Trend is up, right? Trend is up on everything. It's just stalling out a little bit. Is this an up flag down pole coming? We'll know if it breaks under 346 or 344, and certainly under 340. But again, that RSI is still looking like it could take off. So this is not a freight train you want to step in front of. And if you are a buyer, obviously this is the neighborhood where your risk isn't that bad. 346, 344 against 349. Obviously yesterday was the time to take your shot. It was at 343, right? So again, that neighborhood, 340, 343, 344, right? Yesterday, right? Right here, 344, 343. That was your neighborhood to take your shot. If you're a call buyer, you might have got some action on it, but this is an expensive stock, 350. I don't know, the options must cost a pretty good amount of money. But anyway, that's the story as I see it on Sherwin-Williams. Palantir. I had a lot of fun with Palantir. I'll show you why. Because when it was at 20 bucks, I thought it was going to go one way or the other. Let's see it. And these guys supposedly have hooked up with Microsoft and they got a whole bunch of stuff going on with the government. So, you know, they've got good news. There's no doubt about it. And government can print money to pay you. Not a bad customer to have, right? Go ask Lockheed and Northrop. Good customer. They print, they send the money over to you. Anyway, here's what you got here. Here's what I saw happening at 20. Check it out. You see at 20, it's against the purple lines here. And then you remember I told you if everything gets together, it's going to go one way or the other. Either the bulls or the bears are going to give up the traffic jam, right? You go through. No, you go through, right? Well, the bulls got it. And so the call options were very cheap down here. And obviously, I loved it when it ran up to 27, pulls back. You could take another shot at it. Now it's up at 30, pulls back all the way down here during that flash crash. I mean, talk about a giveaway. That again, when the averages are pointing up and you get some nonsense like this, especially if it's not going to be sustained, you're talking about a very good opportunity. Because for this thing to turn into, I mean, this is the kind of move you'd get if Palantir was found out that they had some type of a problem with their accounting, they had some kind of problem with their business, or something very, very bad happened. But it didn't. This was just a flash crash based on mostly what? The Japanese carry trade, where they're trying to unwind this massive thing they've been putting on, where they're borrowing locally in Japan and buying US bonds and US stocks with the money they borrowed. And obviously, if somebody yells out recession, SOM rule, you know, they're going to unwind that. They all want to unwind it in one day. And that's how you get that. Because guys like Citadel market makers, they're not going to take in volume at a good price. They're going to lower that bid till they can just take in this volume and feel like they can make money on it. Did they make money on the market makers make money on this one? A little bit, 21 to 31 in a week. So what's it look like now? It's extended, right? It's extended. And it could keep being extended. Let's look at the 5-year graph. Yeah, there's nothing stopping it. You see, this is when things can get very hairy on the upside. Now let's look at RSI. You're at 74 here, then you're at 62, you pulled back. Then you went up here, you're at 70. Now you're up here and you're at 65. That would make me concerned for a pullback. And again, where are you here? You're at 68, and up here you're at 63. It make me concerned for a pullback. Okay. Now, is the 1 month telling me it's possible? The 1 month has RSI here at 65, and now over here at 63. So it's possible. What would be my signal? I would think if this thing gets taken out at 29.50, you got a pretty good shot that they're going to take the air out of the balloon. This is if you're short-term trading. If you're long-term trading, these guys seem to have good partnerships with big guys. They got good customers. So obviously you would think they could make some money. Some people, I think the valuation's a little rich. But again, if they keep doing more and more business, they can grow into the valuation. But again, that's one of the risks of all these stocks is, you're at 20, 23 P ratio on the S&P. You got the CAPE ratio up at the 30 or better level. And, if anything were to slow down anything, and then people say, you know what, we're not going to pay high valuations. It's kind of like real estate. Sometimes per square foot, they'll give you $1,000 a square foot. Still the same house, but sometimes they'll just say, I'm only going to pay 700 a square foot. And that's when real estate has a correction, because people just stop wanting to pay the higher per square foot valuation. Doesn't mean anything really changed as much as people's willingness to pay for a certain item for a certain amount of money. I think the restaurant business is going to start finding that out because people are going to stop wanting to pay $200-300 to go out to dinner. I think that's going to be happening. Okay, we got Palantir, CMG. And then I'm going to explain what I do a little bit. And maybe we can do some work together. CMG, I thought was going to have a nice move to the downside after they split, and I'll show you why. They split, and you see all of this up here. So this is where I was going with the put options, right? Because this is everybody turning over, and that's the time you take your shot. Going down to purple, I thought it would do. It actually went down to gold, right? So when you have a reversion to the mean, it could either stop at 58 or 50, and it went to both. That's a nice place to be in the put side. Then, of course, we pop back up. This is a reversion rally. And did it stop at blue? Yes, it did. So that would be the place to either take your put options, or if you had calls or longs, you'd get out. And now it's on the defensive again. Again, there is some question that their margins are going to be pressed down. This could be another place where, like McDonald's had trouble. They had to go back at $5 meals because people are making under 100 grand with 3 kids. They're looking to save money. And when they go out for fast food, they're looking to spend as little as they can to get, what do you call it? And I get a little note here that they lost their CEO to Starbucks. See, Starbucks has got stuff going on. They've got some activist investors in there, and they got a product that people have to keep drinking because it's caffeine, and they've already got an infrastructure of 9 million stores. So if they get like this guy from Chipotle over there and get it going, that could be good. Obviously, they didn't like the fact that they lost their CEO. Hey, I don't like the fact that it's in a downtrend. So the fact they lost their CEO is like putting wood on top of a fire that was already burning. But thank you for that information. That tells you why it's down today. Again, is there RSI divergence? 37, and down here is 39. So you know what? Be a little careful against the gold line getting too negative. If this thing really wanted to go, though, let me give you an idea how far it could go. You got it down to 40 if it really gave up the goose. Gets back above 55, that'd be good. All right, guys, I'd like to spend a few moments. Yeah, you want to look at Starbucks, see if there's anything there real quick? Yeah, well, there you go. I guess what I said made a little sense, right? I tell you, they got activist people up there. They want to get their money back, right? And what did they do first thing? They kicked the CEO out and they brought the guy over from CMG. CMG has been a dynamite stock, and it's one of the most well-run companies in the history of companies. So obviously, that's a pretty good deal. Again, you had divergence down here, I'm sure. 34 here and 42 here. That tells you it's run out of steam. Once it got above 80, 78, that told you it's turning. And then today's action is just a cherry on the top. Now it's running into the gold here, so be a little careful. Right now it has some problems right here at around 92, 94. So let's see how it does next week after this explosion to the upside, because this could just be an order imbalance. And order imbalances, what do? The market maker puts the price up where he thinks it'll stop, like 95, takes all the action in. When all the action is done, there's nothing supporting it, and it can fade back down. So be careful of this thing because it is running into some stuff right here. Okay. All right, guys, listen, I'm the option professor and I have an options alert service, and I think it's one of the great deals of all time. So let me explain how it works. You sign up for the options alert month to month. Okay. And what I do is every weekend, I come out with ideas for the following week that have to do with strangles. That's where we buy calls and puts on the same stock, where I've made a determination that I think it's a good idea based on the premiums, based on where the stock is technically, based on news that is coming out, and based on the amount of time that my idea has on it. So I come up with these things every week. We've had a very good time of it during earnings season in things like Bank of America and JB Hunt and Taiwan Semi and Apple and Intel and in the regional banks. So, there's been many, many good ideas that people have been able to see in the last month and a half, particularly. So anyway, what do you get when you subscribe? The first thing you get is you get a 3-session, 6-hour options masterclass. So you know more about options and so you can understand them, right? And so basically that comes to you free of charge. As a standalone product, it costs $397. So you're getting that for free right away. As soon as you click complete purchase, it goes right into your email box and you keep it as a permanent reference guide on trying to understand options. Then you get the strangles. Then you get some credit spreads and debit spreads. Then you get some long-term options that we think have value going out a year or more. Okay. In other words, maybe to be a Pfizer at $28, maybe a 1 or 2 year option at 30 or 32 for $200 might not be a bad idea, something along those lines. So there's the link. Now, again, you sign up and it's month to month. So after a month, if you don't like it, you can unsubscribe. You still walk away with the course. Again, 3 sessions, 6 hours of material, and a month's worth of ideas. And again, 97. Now about the 97, normal price on this is 197. I'm discounting it by $100 to get people started. So you get the free class, you get the strangle ideas, you get the other ideas, you get my market commentary on all different markets.